I've said on your show before that I don't own gold because I think it might go through 2,700 or for that matter, 3,000. I own it because I'm afraid it's going to go to 9 or 10,000. Will it do that in lockstep as a straight line? No. If you're a trader, if you're somebody who's afraid of volatility, if you can't afford to remain long, by all means, take trading profits. That's not how or why I own gold. I own gold to maintain my purchasing power. If you look at the 24 years that we've been through, gold has increased in price by about 8% compounded a year for 24 years. Gold has maintained my purchasing power, which is precisely why I own it.
The gold price soared by 150% between 2005 and 2010, a time of low and stable inflation. Yet between the start of 2021 and the middle of 2023, when we witnessed an alarming inflation surge, its price rose from $1,852 to $1,904 an ounce, an increase of under 3%. Despite the Fed's 2015 tightening measures, gold has exhibited exceptional strength, appreciating 84% and potentially reaching $7,000 by 2025, a testament to its resilience in challenging market conditions. Renowned expert RickRule emphasizes that his investment in gold is driven by a desire to preserve purchasing power rather than short-term price speculation. He holds out of concern that it could surge up to $10,000 during economic uncertainty. From a technical perspective, Rick notes that gold's performance over the past 24 years, with an average annual price increase of about 8%, demonstrates its effectiveness in maintaining purchasing power. Despite the complexity of long-term price predictions, there are different scenarios and long-term price forecasts for gold from 2030 to 2050. Those range from gold reaching $10,000 per ounce, replacing the US dollar alongside Bitcoin, and even the scenario of the world running out of gold by 2050, faced with growing demand. Based on market fundamentals, Rick highlights that the recent pace of gold's price escalation is accelerating, partly due to political pressures on the Federal Reserve to lower interest rates, effectively devaluing the dollar. Financial analysts often repeat that gold is a hedge against inflation. Given the data of the 2000s, it's better to say it's a hedge against economic uncertainty since it's risen in unexpected ways relative to inflation. Now, we present the clips of RickRule's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think gold keeps going. Whether or not you should reduce your exposure really depends on you. I've said on your show before that I don't own gold because I think it might go through 2,700 or for that matter, 3,000. I own it because I'm afraid it's going to go to 9 or 10,000. Will it do that in lockstep as a straight line? No. If you're a trader, if you're somebody who's afraid of volatility, if you can't afford to remain long, by all means, take trading profits. That's not how or why I own gold. I own gold to maintain my purchasing power. By my measure, gold didn't start moving 3 years ago. Gold started moving in the year 2000. If you look at the 24 years that we've been through, gold has increased in price by about 8% for 24 years. Gold has maintained my purchasing power, which is precisely why I own it. Is the pace of the escalation of the gold price picking up? Yes. And in the face of political pressures on the Fed to lower their interest rate, which is a different way of saying devalue the yield on the US dollar, should gold continue to accelerate? Yes, if all other things remain equal. Again, though, your technique with regards to gold, your strategy with regard to gold, will relate more to you than to gold. You know, when I look at countries around the world in terms of money in, money out, now I've taken some risks. The country that's treated me the best, money in, money out, was Congo. The country that's treated me the second best, money in, money out, is Southern Sudan, both war zones. Now, I went in at an extremely risky time, but if you broaden that a little bit, the country that's treated me the best, money in, money out, third place, is Chile. When I look at the place that I suffered the biggest personal loss as a consequence of political risk, that was on Viceroy Resources in the People's Republic of California. Imagine that you were a shareholder of BHP and Rio Tinto, and you had discovered a deposit in Arizona, in the USA, in the Central Valley, surrounded by copper mines. Suppose that this deposit was 1.5 billion tons of copper-bearing ore grading 1.5%, 3 times the average grade worldwide. And suppose that you had been stuck in a permitting morass after discovery for 26 years. If you discount your cash flows at 8% for 26 years, what happens is that the entire net present value of the discovery, by the time you produce it, is gone. And people tell me that Arizona isn't politically risky.
RickRule, a prominent mining investor, emphasizes the importance of accepting political and social risks when investing in silver, particularly in countries like Mexico and Peru. Despite these challenges, Rule maintains that Mexico is crucial for accessing high-quality silver deposits. Peru has historically been one of the world's main silver exporters, primarily from mines extending from Cerro de Pasco to Huancayo in the Andes, but production has decreased since the early 1970s. Data from the U.S. Geological Survey indicates Peru holds 12% of global copper reserves, 3.9% of gold, 15.3% of silver, 9.5% of zinc, 5.3% of lead, and 2.8% of the world's tin. Peru ranks as the world's second-largest producer of copper, silver, and zinc, as well as a significant producer of gold, tin, and molybdenum, and, according to Peru's Ministry of Energy and Mines, PMEM, the sector is responsible for 62% of the country's exports and 9% of GDP. While assessing fundamentals, Rick points to his own experience in countries like Chile and Peru. He acknowledges the potential for drama and fluctuations, but emphasizes the long-term rewards of investing in high-quality silver assets. Let's get back to the interview.
If you're going to be in the silver business, you're going to be in Peru and you're going to be in Mexico. Rough countries. The third country is Russia, a rougher country. I have found in my career that while political risk is real, technical risk is more real. I would rather have a great deposit that was worth stealing than a crappy deposit that wasn't worth stealing in a good country. And Mexico, as you say, is deteriorating politically. I have found in Mexico, and I'm no expert, but I have found a lot of support for mining in the regions where mining occurs. And I would suggest to you that the opposition to mining occurs more in the center, more around the intellectual leftists in the party in power. There are other problems in Mexico, however, in the Sierra Madre Occidental, where we think of as where the silver mining districts are. And those are sociological problems related in particular to narcotraficantes, narcotics traffickers in English. And those problems aren't going to go away. If you are going to be a silver speculator, you are going to have to be in Mexico if you want high-quality deposits. And if you're going to be in Mexico, you have to deal with the political problems and you have to deal with the sociological problems. I've been dealing with them now for 30 years, and they have occasionally caused me heartache. Certainly, they have caused me to experience fluctuations, drama, if you will. But I need to say, over time, being invested in Chile and being invested in Peru, being invested in Argentina, in the silver space, has been extremely rewarding to me. I look back at Silver Standard Resources, financed at 72 cents, hit a high of $45. Declined a lot since then, down to 12 or 15? From a 72-cent base, it doesn't feel too bad. The same thing with Pan American Silver. If you are really, truly going to be a silver investor or a silver speculator, you have to accept the political drama. You also, when you look at Mexico, have to listen to what the president-elect has had to say, rather than the way that she has quoted. She didn't say that she would ban open pit mining. She said that open pit mining had to have the local community support in the communities where it exists. I believe that local power brokers will probably try to manipulate the circumstance a little bit so that they can gain personal advantage from politics in Mexico. But I don't believe that communities where the alternative to employment in the silver industry is growing rice and beans in the desert will continue to be anti-silver for any substantial period of time. I guess what I need to say is if you're going to be in the silver equities, and I am, you have to swallow twice, and you have to accept the political risk, and you have to accept the social risk. If you aren't going to do that, you are going to be involved in silver exploration in jurisdictions that are geologically marginal compared to Mexico and Peru.
While gold can be volatile in the short term, it has maintained its value over very long periods, making it a stable component in a long-term investment strategy. Bullion Vault's latest survey now forecasts a gold price of $3,070 per troy ounce at the end of 2025, an increase of 16.2% from today's level. Given the recent economic uncertainties, is investing in gold a wise decision? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.